Hi, everyone. This is your host, Dr. Peter. Welcome to this week forecast. Price pretty did what we expect it to do last week. And again, in trying to correct, because we had predicted that we are expecting wave 4 to the downside, and price did that. But in between this place, it could be a big challenge for most traders. And trading consolidation or correction on the lower time frame could be a bit tiring. So it requires a whole lot of attention, because the price movement within that time frame is so short. It's not long. If you are trading consolidation on a higher time frame, it's different, because that will give you opportunity to plan carefully. But when you are trading on a lower time frame, which this is what the opportunity the price is giving us, it's usually very difficult. But there are rules to it which one must adhere to, because you can't be too optimistic. Price will do what it will do. In the end, it will be okay. Price actually did what I predicted it would do. But have you gained, from it? Because you might not actually profit from it because of the time frame these corrections are taking place. Now, you can't be too quick to enter or to execute, and you can't be too late. So there are two things here. You cannot be too quick to enter a trade, and you cannot be too late. Due to dynamics playing out on the lower time frame, it will require constant surveillance, constant checking, and looking at the structure, how it's unfolding, for you to know when exactly to enter and execute. And once you miss a point of entry, it's going to be difficult for you you can't just enter anywhere, because the structure can change on that time frame. And eventually they will still do what they want to do. The price will print what it wants to print, and it will always make sense. But trying to find time, I'm going to also tell us what we can do and how we can strictly guide ourselves. Now, this is DXY, the time frame, and we had said that this is expected to give us a 5-wave structure to the upside before we correct deep to the downside. So now we still believe that the DXY is not yet done powering to the upside, at least in the medium time. We expect that to happen, but not immediately. So the question now is that, is this movement to the downside done or not? That's the question that we need to answer. And we know within wave 3, this is daily time frame, within wave 3, we can see 1, 2, 3, 4, 5. Wave 3 is completed as a 5-wave structure. And within the larger time frame, we still see 3 waves for now. 1, 2, and 3. This is the end. So the one viewing here seems to be the 4th wave that we have been waiting for. But again, 4th wave in the bigger time frame also has a knack of testing without breaking the limit of the primary 4, because the primary 4 is given by this with 4 of 3 here. So the price still has liquidity here, which they may go up from here, and they may still come down from here, which means that DXY may still fall. DXY may still fall. And we are going to look at how to trade this and what discipline you must have And when you are trading consolidation here, you must look at your account and try to trade safely. It's only when you are done with a larger time frame and you are now making a bigger move, that's when that is going to give you a lot of time to plan and to add to your trade. So these are short trades that this is going to give us now. What I've said here now is that this fourth wave can still come to this place before it's done. It is done. Is it done now? So far, we are saying that 3 waves, which looks corrective, and that is what is expected. It's going to be corrective. And in this correction, if you go on the lower time frame here, probably you will see this as a 3 waves or as a 5 waves, this one to the upside and this one to the downside. So I believe that we are in the big fourth wave, something like this. Like I said, are we done? Maybe yes, maybe not. The only thing that will tell us that we are done and we are in that fifth wave, it's when you now break this primary B wave here. So we must look at what is primary, what is secondary, and these are the routines and things we must learn to know how to engage, ourselves when we are even trying to put the stop loss and the areas of invalidation of a particular trade, either to the upside or to the downside. The invalidation level, if we are going to correct big time, will be this area. So once you violate this area, you are now in a bigger correction to the downside. Now, the invalidation level for more upside to finish with 5 will now be at this area here. So let's dip into 4-hour time frame. In the 4-hour time frame, we had seen 3 wave correction in the lower time frame. So this is the first wave here, an A, B, C of A, and a B, and a C. This C wave came down in 5 waves, and it may actually finish this correction, and the price may start going up from here. The invalidation level to confirm that the price, if price now wants to go up, it has to break this to the upside to say that, okay, dollar is going to gain strength again. Now, but the price still has a knack to come to this side. So price may still fall, DXY may still fall. And around this area, between here and here, we may see a push up for the last wave that will be like this to the upside. Now, it looks like, okay, maybe we can buy, but what I'm seeing, I'm not seeing a good trust to the upside. Let's look at 1-hour time frame. The 1-hour time frame and the lower time frame will tell us what we are seeing and how careful we can be. We have to be very careful trading these. Now, in trying to trade this now, see when this one came down here, this one, of course, in its on the lower time frame, the A structure gave us a 5 waves, 1, 2, 3, 4, 5, and the B wave here, A, B, C, and the C wave here before we have a major A, B, C, which came down. Now look at this. This does not look like an impulse that will go to the upside. I can't count 5 waves to the upside, so it kind of worries me because looking at this one, an A, probably a B wave in the middle here, and this one was quite impulsive. It didn't break 1618. If it has marked up to 1618, then that could have been impulsive to say we are going up to break this top. And these are ways in which we look at stops. So what I'm trying to see now is that it seems that the price would make this, the first a correction to the upside for a drop. So it seems we are going to have one more drop to the downside. That's the way the corrective nature of this move. It's very typical of what price wants to do to fall. So I can't see any impulsive way. Now, where is the invalidation level that tells us that this price will fall? The invalidation now is this area. So once price breaks this area, then it means that the price wants to head for this area. So the invalidation level is this B wave here. Price coming here, it's a B wave. Now, again, if you want to sell these, you're not waiting for these. You're not waiting for price to get here before you sell. So the invalidation level here for this drop will now be at this level. So in case you want to do a sell from here, then you have to put your stop loss here. Price coming there means that they want to go up. So these are things and clues and how we can you of course you don't want to over draw your account into you can't have afford to just allow your account to be drawn on either side without when the price is not making any move yet or any decision yet. So of course price could have just gone up from here, but that is not what we are saying. So we are going to look at other USD pairs to see what they are also doing. They are doing slightly different things. So but the mood here captured from DXY so far means that the price wants to fall. Now, how would we confirm that this also now is going to fall? By turning this one to A, B, a move that breaks 1618 and breaks this B will be what to expect. So if you can catch yourself from here, your stop loss in this place, something small lot size, and to see how it unfolds. So price coming here, breaking this low tells you that, okay, you can now wait. Any correction you now get, you can now add more for a further, downside. That's what we can do from there. So now if we look at euro dollar is the same. So we are taught that this is a ABC, and price actually had marked. Let's look at it on the larger time frame. It's an inverse, okay? So looking at this, that we've done 1, 2, and the third wave is completed, we are seeing a fourth wave. Of course, this area is where we expect invalidation level for this bigger fourth wave before we go down again to see something like this to the downside. But are they ready to move to the downside? It does not appear, as a three-way format structure, it's looks complete for the price to fall. But what I'm seeing on the lower time frame does not suggest that price wants to fall yet. I think they want to go more to the upside around this area without breaking this area. This area will be a key area. If you take this as a 2, this as a 3, price had reacted to the downside. Give us a first reaction at 32. Is it 38.4 now? So now, but the price may still grind up to a 50%, which is allowed for a deeper correction of fourth wave. So now we have this ABC. The invalidation level for more downside will be here now on this higher time frame. So what price present to us is what is so it's key. Now, eventually, if it's a correction, so if this is an A, this is a B, and this C wave should not actually go beyond 168 to the upper to the upside. A, B, and a C 168, maybe slightly around this area is 168. So which will still be good for price begin to fall. So you should be looking for a reaction if that happens. Now, in terms of A, B, C, yes, this impulsive wave, looks, what we should expect. But now, what the price is doing here is not giving me a big reaction, an impulsive reaction to the downside the way I expect it on the 4-hour time frame. So how do we plan to trade this? Because what the price can do, price can decide to go both ways. So you must know when the price has given you a structure to go both ways. Look at what they did here too. Now, price going up here, yeah, we thought we had A, B, C here. What the price did, because of the consolidation, is to take out this B wave, because some of us were actually buying and putting our stop loss here. Price did this to just get us out, liquidate, most traders out and go up for C. So now look at it, this area. What they have done is to give us an extended flat in the middle here now. So an A, B, C, and this is the low to be taken for now. But would you want to begin to buy from this level and put your stop loss here? It will be a big loss if price will begin to fall, because price, we still know that the chance of price falling is 70% to do a wave 5 than to go up from here. But again, in the immediate, price does not look like it wants to go down from here, like it wants to go up. So you have to plan to actually buy euro dollar cautiously on the lower time frame now. So of course we have seen this ABC, the 3 wave that tells us is a correction on the lower time frame, 1 hour time frame. So what we are also seeing is not impulse to the downside. If price had planned to go all the way down to break this wave B, which is invalidation level, to tell us that now wave 5, last wave 5 is in progress. Price came down pretty much in 3 waves. You can see 1, the B wave, A, B, C in the middle, and this just slightly below 168. No, sorry, below probably 100 extension. And price so far has given us what seemingly will turn to more than a 3 wave to the upside now. So what do you want to do here? If you want to buy from here, all you can do is that the price should not come and break this B wave if they intend going up. So a buy with a stop loss behind this area is what you can do, given the character of this wave, because there is a reason why you want to buy. You are not seeing any impulse. What you saw is a correction, and the price is doing this. So how do we plan this? If we scale down to 15 minutes time frame, I'm really showing you a whole lot. So you must know how to minimize your loss in case price wants to do other way around. So what we can see here now is, like we said, this will be a place. As a matter of fact, this will be a place to put your stop loss for price to grind more, because if you come here, you might still get burned, because price may just do a fast one, an A, B, and a C, a deep C, an extended flat before they push up. So when you see configurations like this may have formed the first wave completely. The second wave, the B wave, is not in the clear or as it is completed yet, except there is a push up to break this area now. So once you break this area, so you might be thinking that, okay, maybe the B wave is completed. So what you can do now as a safe trader is to put your stop loss here, and your stop loss, assuming you want to even buy instantly from this level. So it's not small. That is still about 34 pips. So 34 pips, yeah, on your 0.01 is $3.4, and if you have a bigger lot size, you know how much you want to risk for buying from this area. But the ideal thing is to wait for this to actually come to this area, to react, correct, and look for correction before you buy. That would be ideal thing to do. So for now, we are seeing a configuration of most likely a 1, 2, 3, 4, 5 here, which the first wave tend to be a diagonal, or a diagonal. So it's not impossible. And we add this could be a wave A, a wave B, or a wave C before the price goes up again. So all we can do is that you buy small from here, put your stop loss here, and wait for, if you're going to get a deeper correction, wait for that deeper correction to add a little bigger lot size with your stop loss still around this area and watch. But so far, from what we can see here, it's a correction, a corrective phase. Like this is the first A, B, C of B, and a 5-wave C. If this has extended, like I said, you'd have said, okay, you should have trusted the signal that is going to go down. But so far, it looks like we are going up. I don't want to waste more time on that. Now, let's look at another one that looks different. Let's look at Nzdusd USD. Nzdusd USD looks a bit different. We have to look at those possibilities of what the price wants to do. First, let's see the weekly time frame. In the weekly time frame, we are taught that this is what an A, B, and that a C wave at least 100 extension. So what the price has done here is to not to test 100% extension. You might be counting this as a 1, 2, 3, 4 should have been here, and the price will push up. If something changes, just believe and take it that it has changed. So this has changed now, but the price for me, I think, will still be going up to break the top. For this move to the downside, this per se will not be an invalidation level because the price would probably have a knack to grab liquidity before they go up now. So we can see this as A. When we had this B wave, you know how this B wave drag to the downside, thinking that it's going to break this bottom, but it never did, and we had a reaction almost, I think, at around 78 retracement before we saw this move to the upside that almost broke this top before we got this reaction. So what do I expect now? I expect something like a 78 retracement to the downside, and such that this becomes an A, bigger A, a bigger B. The bigger C is still on the in play, so which will give us at least 100 extension to the upside. Now, if you look at that, so this now to the upside is now an ABC of A, and this move, which is corrective move to the downside, will now be a B. Then the C wave here, and this bigger C wave, ABC, and ABC here, I think from what I could see, will tally at exactly 100 extension. That is where, once you get a reaction from the low here, the sell, I believe, is still going to break this low. Just break it and breach it before they begin to see the upside momentum. And that will now run 5 waves, 5 clear waves. Since this has given us an A, B, and a C. Now, with that said, on the lower time frame, that is what I can see. But at the same time, we are going to trade cautiously. On the day time frame, so far, we can see that move. This looks to be going down, and I think it's still going to drag to this. It has the potential to fall from the current level another about 120 pips of the current level. That is big, but you have to be very careful. Now, we are seeing if this is an A and this is a B, this also is going as a 5-wave structure in the sense that we can see a 1 and a 2. It is a 1 and a 2 within wave 3, 1, 2, 3, 4, 5. Then probably this is a 4 and one more drop to break this low as a 5-wave structure of a corrective B before we go up, because it's actually overlapping. Yeah, very overlapping, not impulsive like that. So below here, price will probably turn to the upside. Now, are they done on like euro dollar that we expect could still buy, push up? Now, this reaction, it looks impulsive. For us to have this here, the same thing they did, they came down where you see an impulse, unfortunately, is a three-wave structure. You can see it clearly here. 1, 2, 3 to the downside. And before we began to move to the upside. In fact, sorry, it's a five-wave structure. 1, 2, 3, here, 4. If you look at it, it's 5 waves. So from here, 4, 5. So, and they now did it with A, B, C here. Now, given the magnitude of the fall here, we have to go down on the lower time frame to see if they are ready to fall, unlike euro dollar that is likely going to push up. So they might have done an A, B, C here. These also, you know, had actually reacted to the downside from the 100 extension level. Now, on the 1 hour time frame, so we are seeing these going down. 1, 2. This as the third wave has not yet clicked 168 extension. So for me, if I'm in a sell, my stop loss should just be around this area, maybe just slightly above 50% of this retracement from this, either wave B here or wave 2 here, slightly above 50%. That's where you can put your stop loss. To see if price will drag more to break 1618 to the downside. The invalidation level for this to drop more and continue to drop to break that low ice that I showed us on the higher time frame is this area now. So this will be the invalidation level for price to break. That has not happened. So, but this looks impulsive, but not complete yet. So in trying to be cautious, you don't want to put your stop loss here, because that would be a big loss if price decide to go up and break the top. So this will be an area slightly above this area to put your stop loss if you're in a buy. If it knocked you out, a small profit or a small loss is desirable based on what the price could do. So if the price really is in that mode of impulsiveness, then it shouldn't break this area before it resumes dropping again. So that's how to look at it. So now let's look at USD JPY. Looking at USD JPY on the higher time frame first. Let's look at the daily time frame of this. Okay, let's look at the weekly time frame first. Now, this seems to be going up to push up. We are taught that probably at one point in time, we're engaging the thought of A, B, C, sort of A, then a B, then A of a B, B of a B, and a C of a B to the downside. But that is clearly eroded. There is a break out of this area now. There is a break. So out of this area. So far now, this from here to here has confirmed that that is the fourth wave here on this, in this time frame. The fourth wave is done. The fourth wave is done of this move. The fourth wave is done, and price probably is going up. Looking at it, it has been a consolidation. It's like a wedge. Even though the price is going up, the momentum is lost. I don't see a big push again, but they are not ready to push to downside, because if you look at here, from here, this, you know, it's more of like a wedge, drawing a wedge from here. So which means that we are getting to the end of this move. But what you can do for now is just to measure and to concentrate on this wave here. So looking at this wave, we may have done a 1 and a 2 here, the third wave and the fourth wave, and this is the fifth wave to the upside here. And this fifth wave to the upside has a tendency from here to here of doing a 1, 2, 3 extension or a 1, 6, 1, 8 extension. So that is where this one can go from here. If I now scale down to daily time frame, now on the daily time frame now, since this is still the wave we're talking about now. Here, 1, a 2, a 3, a 4, and this is the 5th wave. The 4th wave here, of course, gave us an A, B, C to the downside, and that they are going up. Now, in this wave now, to the upside, all you can do again is to, from this level to this level, look at 1618 extension to the upside, or 123 extension. That is the area this might be ending its move before we see a bigger correction to the downside. So from here now, this as the 5 waves had completed itself, or almost completing itself, like a 1, 2 drop here, a 3, a 4 here, and this is going up as the last 5 waves. And when we are trading, it's better for us to look at what the price is giving us and always plot our invalidation level when we are trading and what we expect. If price is going to do more than that, we would have exited at a place that we thought the price was going to, or is going to exit. And if price wants to push against us, we would have thought of what is the invalidation level for this not to be a sell. And that is where we hide ourselves. Oftentimes we don't do that, but we have to be disciplined to do that so that we won't continue to chop off our money. Now, here now, this move, if you had seen it, you would think that it's a big drop, it's highly impulsive. Yeah, it looks impulsive, but it can be a correction. So in the end, at the end, probably they have done first wave, the second wave here. After this, the bigger 4th wave here, A, B, C here. So the first put wave 2. Now this is wave 3, 3 of 3, 4 of 3, 5 of 3 here, and a big 4. And what makes this one a big 4? Because a single drop and not a 3-wave correction, probably a pullback of a single 4. The return leg is going impulsively. So this, I can tell you, is going to break the top. I can tell you it's going to break the top. But is it now that you want to continue to buy? No. What you can do for now is to wait for a correction, at least a 3-wave correction, to look for a buy. And your validation level probably will be at this low for now. If you look for a buy, a 50% retracement should be enough, whatever it's going to give. And once you now begin to see a breakup to the upside, you now begin to plan. So it's 618. So that is what we expect now. So if I bring out the drawing, we can begin to see that this most likely will be the level of 1, 2, 3 within this formation here. 1, 2, 3. This is 1, 2, 3. And here will be 1618. Now, for a bigger move of these 3 and 4, the 1, 2, 3 is here. These are the area you can expect this price to navigate to finish up this 5 in blue before you now you can see a bigger correction to the downside. Now, would that play out? We'll see. We need a 1, a 2, a 3, a 4, and a 5. If it gave us that, then after the 5th wave, you have to wait for a signal or a reaction to drop the price, breaking the immediate 4th wave, then you look for a retracement to sell. That is how to do it. Now it's going up to break the top. That is what I can see. Now the next one is Eurojpy. The Eurojpy played us a fool. It played us a fool. We are taught, due to the weakness of euro, we are taught that we are going to see an ABC here, a B wave, and this was looking like a 3-wave. It's still a 3-wave to me, for us to begin to come down. The first reaction, second reaction, break down and do an 100 extension to the downside before we go up, but that is not what it's looking like now. But can this potentially still fall? Yes, it can still fall, but we now have to study what the price can do, what can make this thing fall. Now, within this configuration of an ABC, the primary B wave now will be this. If price should take this to the upside, then don't expect that price is going to fall again. Price would have to finish up this completely and complete this end of structure to the upside before they begin to fall. So this is what we expect. If I bring out my drawing, also the area of interest for this to stall and continue to fall will be around this area. So we have to know that it will be around this area. We have to know that its price is almost also grinding to that place. But let's look at what the 4-hour time frame is giving us. In the 4-hour time frame, this ABC may have finished up this correction. But again, I'm worried because what is here is an ABC. It is not 5 waves. So we must know that it is not 5 waves. So we may see an ABC. That's clearly an ABC for me. So it might just be an A B wave to the downside. Then we now see a C wave. If that C wave will not break this area, around this area, if we see a reaction to the downside, we might actually experience that big fall to the downside. So we have to see the way this one is going up. So far now, this is ABC of the first wave. We can call this one. This is not one to me. It looks like an A wave to me. This to the downside might looks like ABC, which is a B wave to me. The challenge was that the liquidity was grabbed under this low. So which we thought that since it was like a 5 waves, 1, 2, 3, 4, 5, we can now begin to push down. Of course, a C wave can also be a 5 waves. So it's allowed. It's actually allowed. So that's the thing about it. So it's the timing of you looking at the structure and where you want to really execute. So far that this has gone up to break this top now tells me that the price is going up. This top is taking, this top is taking, price is going to go up. So I can, the least I can do is to entertain this as an A, B, C to the upside without breaking this top. Invalidating this level means that the price now is pushing higher. Otherwise, within 76 retracement of from here down to this area, if price would give me a reaction there, I'll be looking for a sell, maybe cautiously, and see what will unfold. And very tight executions around that area. So for now, this is going up, almost finishing the 5th wave. I would wait for it. I will wait for it as a 1 and a 2, probably around this area. This is 76 area, and this is 100 extension area. B wave invalidation level is still this area. So breaking this area for me, it's that the price is not coming down. But because of the 3 wave nature here, I can't see a clear 5 waves here to tell me that this is 1, this is 2. We have to stick with that. I can't see that here. It's like an A, B, C to the upside. So price may still come to this area. Within this area, this fringe, this is 1618. If we see this one developing a 5 waves, a 1, a 2, a 3, we might get a deeper fall, the 4th wave, then the 5th wave. Then we should be looking for either correction or a bigger drop. That's what we can do for. So we have to wait. If this one will give us a correction now, an ABC correction, we can target and aim this area. That's all we can do. That's short trades that they can give us until they decide if they want to break up, they want to break low. So anything is possible here. Don't be rigid and think that, okay, because this is this and this is this, and it's breaking up here, they are going all the way to break up. There must be an invalidation level, which is this area. So once price takes this to the upside, then they are going up. Price to get here reacts, and when it's reacting, the only thing you can be modest, just be modest When you see a reaction to sell, the modest that at least a 3 waves correction. And if price without continue to glide, you can now begin to trade your stop loss. If the price will now invalidate this area, breaking this area now again will mean that price is going all the way to break down. So that's how to. So the invalidation level to the upside is this. Invalidation level to the downside is this. It's a big gap. It's big, but for now, the story that is being told or is being created by this wave now, we have to follow it. For now, this is not where you want to buy. Allow you to correct, look for your buy, target this area, and see the reaction you are going to get around this area. Now, the next one is, it's a bit long because I'm teaching and I'm telling us, I'm giving us structures, and I'm also telling us the areas we can look for potential trade executions. On the CHF JPY, that also has changed. This also is going to break to the upside. I think this one looks definitely sure to break to the upside. So what do I see here? If we quickly navigate. Now, within this area, this is the last 5 waves. So it means that this is wave 2 here. This may have finished with 4 here, this drop here, and this is the last 5 waves to the upside. We can see the way this one is going to go to the upside before. Let's see where they are likely going to react to the downside, maybe around this area, very close to this area too. And these are the areas we'll be watching for reaction to the downside, for a big move to the downside. They are almost there. How many pips? Whatever they do around this area, just be careful as price is approaching that level. About 400 pips. So it's not small. It looks small on the higher time frame. It's not small on the lower time frame. It can blow your account if you don't know how to trade it. So now, for me, I think this wave 4 is gone, and we are within wave 5. This wave 5, I expect probably a diagonal to emerge now. What is the invalidation for the upside here? The move to the downside here is in 3 wave 1, 2, 3. So breaking these to the upside, I have to wait for price to break this to the upside. If I get a reaction, any reaction I get here is for me to look for if I can scalp a sell to the downside, waiting for that sell and look for a buy to the upside. That is what is possible. Why would I be looking for a sell to the upside? I'll be looking for a sell if the price would get here or react just before it or break it slightly. I'll look for a sell to the downside and a buy ultimately because of the impulsiveness of this wave. So what I see here, I see ABC of wave 2 here. That's what I see here. And this is the wave 1 of the ending structure, ABC of a wave 2, that we are going in for at least 100 extension of a wave 3. So if you're going to, if price will break up at 100% extension, that is where to just leave the trade, watch for what the price wants to do again, look at the structure and plan another trade. So that's how to do this kind of a trade because you are very close to the top. So how are we going to plan this? On the lower time frame, like I said, unlike Euro JPY that gave us an ABC, this one is clearly a 5-wave structure. You can see 1, 2, and wave 3, wave 4, wave 5. And this is the first correction, A, B, and a C. And inside this C wave, this is what I said we are expecting also from Nzdusd USD. So inside this C wave, you can see an A, B, C, and a drop. And the price had reacted impulsively to the upside. But we need a correction. So either around this area, if this will close and give us a bearish wave to the downside, we look for a short wave, a short correction. But you don't want to sell big because any sell is risky. So what should be looking for anytime it will give you a reaction to correct 3 waves to the downside minimum, then you go for the push to the upside. That's what I can see here. And when we are going for that push to the upside, we are targeting 100% extension to the upside for wave 3 of the ending move. This is 1, and this is A, B, C of 2. Then we expect this also to give us a 5 waves. These are giving us 1 and 2. So this might just be the first wave. We might be expecting something like this or something like this. That's what, once we get something like this, just know that it's a clear sign for you to go bullish. Price wants to go bullish. So it's not going to go up like this to the upside. No, it's not going to do that. But when they decide to turn, the first thing that the price would do, if price wants to correct, is the price will take this low. That's the first internal structure that price will break. And the second thing will be this one. So once price take this one, it's a clear sign that they want to probably correct. We'll be expecting a change of trend to break low because of the impulsive nature of this one. But at least the price will still take this area before you can begin to say you want to look for a buy. Don't look for a buy in between this area. This low has to be taken. So that is what we expect. But the first sign that is going to happen, this has to go, and this also has to go, maybe in the middle here. But this, I don't think will go. If price will take this area, and this is too much for price to now, it will now look like it's a bearish market again. This price will come here. Yeah. The last one I'm going to talk about now is it's gold. It's a long training. The training is beyond the forecast now, because I need to do all of this for us to be aligned and how to execute and how to plan. Do like what I share here if you see it valuable. And given a forecast here that a breakout of here, it's a sell. So another thing you could have done is to just put your sell stop around this area. So once price will break, might be going down. So based on what we are seeing around this area, which is the corrective nature of here. So this is impulsive. What I expect from here, I expect this to break this area. An 100 extension around this area, around this area here. Yes, around this area here. I'll be expecting a reaction between here. Sorry for that break in transmission. The signal got lost, so I had to quickly. So now, we expect this to give us a 4-wave, 5-wave structure to the downside. So this is still a wave 1, wave 2, wave 3. We have done an internal 4, which around this area. It means that we might be getting some reactions around this low here. We might be getting some reactions around this low, which might just create the 4th wave without breaking 4733. So for now, that would be an area for price not to break. If we go on the 4-hour time frame now, let me just show us here for those that trace gold. Now, so within what we are trying to look at here, this is the first wave, the second wave. We saw a little reaction here, and we thought the wave 4 we get here. I never did. Around this area, we got a reaction to the downside. So let me quickly turn to the daily resistance is what we're going to look at now, which is this area here. Let's look at that daily resistance, because price may be coming to that area. I want to show us something. Price may be coming to that area. We are yet to see something like this. We need to see something like this before we finish up this wave. So if you are not selling yet, you need to wait for that to come. So yes, I think right here on this blue, right here. So for now, the resistance will be around this area now, around 47336 area. So price may still push up to give us something like this. We may still. But if price will not do that, we're almost at where we see that all things is going to end around this area. So it might be ending around this area. So we must be very careful trading this. It can end up giving us an ending structure anyway. So it can end up giving an ending structure. So if I go to the 4-hour time frame, now with 4-hour time frame, so what we are trying to propose now is that if wave 3 is not ended, if this will be a wave 1 in the bigger blue and 2, and that this 3 is not ended, this for us is a primary 3 for now. So if it's a primary 3, it might not now mean that this will come here as the 4th wave, the 3rd wave of the 3. This will come here in the purple, and this will come here to finish that. And if just that is finished in the purple in the 5, then which means that wave 3 would go slightly down. Let me show us what I'm saying now. So what we are saying now is that we expect, if you're going to have a bigger 4th wave from this low here up here, if we are going to have that, now this area of 1, 2, 1, 2, 3, that's 1, and this area of 168, between those two areas, you never can be sure of what price is going to do. So between here, this area and this area, so if wave 3 has not ended here, then wave 3 will be ending around this area. So if that happens, if wave 3 ends here, then you will now be expecting wave 4 push up. Wave 4 push up. That wave 4 push up might be coming here, which is this white area at 32, and may slightly break this area without breaking this 4,800 now. So 4,800 will be your best area if that would happen. Based on whatever price we do, we will not expect price to break beyond 4,800 now. In the immediate, whatever price is going to do, that area might only just not be up to. So I don't see in the immediate price breaking 4,800. So all you can do if you have been selling from around this area is to wait for price to finish this move here, look for a three-wave correction to the upside, and ABC, a bigger ABC is going to come. If that comes, then we'll look for another sell again to the downside. That's what we can do. But if that is not going to come, you must know it's not good to sell from here now. If that is not going to come, it means that price will go all the way to come to this point. And so if price comes here first, then don't look for that big fall. If price comes here first, that ends it. Price is going to push up from here. So price is almost, actually it's around 4-14, but around 4-20, 27 area is good for you to get out and watch for what is going to happen. So, but in terms of looking at the bigger time frame corrective format, that will tell us that we expect that this wave C will be 5 waves. It's not yet. I still expect a bigger correction to the upside. So if you think you are not in a sell yet, I think you should wait. I think you should wait. I think you should wait. And if you're going to have that big correction, so it means that price would break this trend resistance. Don't look for a pullback now to sell. That is the advice I can give you. With a break below this level, don't look for a pullback to sell. Allow this to finish itself, allow it to finish its course. Then let's now look for a bigger correction to the upside. It's going to come. It's going to, based on what I know in terms of structure, it's going to come. If you go to the daily time frame again, it's a bit long, but I think it's worthwhile. So it's a bit long. I expect 5 waves now. So this is wave 2. I expect something like this without breaking this area or around this area. Price will still give you that opportunity before it falls the last time. So yeah, around this area, before it tests this area, I think we should get that reaction for the 4th wave. Do I want to buy the 4th wave? No, it's risky. Allow the 4th wave to go and sell the 4th wave to the downside. That's what we can do. So if that, one of the ways you know if price is ticking and the structure is aligning with your thought is to expect this to come. If it doesn't come, then I don't chase the market to the downside from the level it is. If it comes, I wait for it. Let me wait for a 3-wave, at least a minimum of 3-wave correction to the upside around that area of 38 or just before it, and sell from there. So with that, I've come to the end of this week update. Do like, share, comment, send this link, help us grow this community. Thank you. Bye.